this is going to be a quick video. Just like we were talking about yesterday in the previous video and the one before that, Bitcoin is now starting to go lower. I did tell you that this was not a flag up here, so it's very likely that we were going to break below. We didn't even manage to break above. Normally when it's something like this, you know, we have a bit of a break up and then we fake back down and we dump. We didn't even have that. We actually just straight up dumped, which is a sign that there's a high amount of weakness in this market. If we actually have a look at the volume currently, the volume indicates that our dump actually did come with quite a large amount of volume. As you can see, these peaks that were going up, these had a decent amount of volume, but the rest of our uptrend didn't really have very much volume in here. And same over here, we didn't really have very much volume ticking. On the contrary, when we've come down, a large amount of volume has spiked, especially on the 4 hour. If you head on to the shorter time frame, we have obviously come down here, we've trended down, and now we are consolidating. So we take a genuine look at this. You might not be able to see it on this chart. If we go for the 30-minute, maybe not 30-minute, we're going to have to go back to the hour. We have been down here for quite a while. This drop actually happened early in the morning, about 2 a.m. UK time. So if you actually take a genuine look at this, this is obviously going to be your classic flag pattern whenever it decides to break, but this would be your classic flag pattern. If you go into the 15-minute, get rid of this 15-minute. After I will show you the supports in a second. So this will be our classic flag pattern. We have not gone above 50% of the route upwards. If we want to take it from, we'll take the flagpole as this line down here. Measure it like that. Moving that down, if we break here, that'd indicate that we go down to 63k, and that's perfect on our chart for how far we would realistically go. As if we go back onto our 4 hour, if we take our Fibonacci retracement, and let's say we draw it from the top downwards. Wrong way. That's dodgy, right? Hold on a minute. Let me delete that. Draw it from the top up there down to here. If we draw it down to the 59k level, back to our previous low, we take a nice zoom in here. We have actually respected the 0.5 level. We've come here, we've bounced on the 0.5 Fibonacci retracement at 66,350. That would be. We've come down slightly below it and we've wicked. As you can see, there was no candle close below it. It's an indication that that's good. The support is holding, just like we said previously. The support does hold. We had a nice bounce over here as resistance, and then over here we had a nice bounce as support. And same back here as well. When we wicked down, we came back up quickly. So that is a good sign that if we do start trending higher, we could start trending from this point and go up. But judging by the fact that we have now, if we actually take a good look at this, we actually dropped down to it depends what chart you look onto. On the MXC chart, we actually dropped below 66k. On here it says we don't drop down to 66 on the Binance chart. But on the MXC chart, we did actually drop down to 65, about 65,500. That can differ from obviously exchange to exchange. It depends. But judging by the fact that we dropped that low, that is actually an indication that we are basically just sat on support. This is actually quite a big support area over here at 66, 65k. This is a very big support area. Actually, we'll use a different line. Let's go for a parallel channel line. Right, so this is a pretty strong support box over here. Around this area, that is a very, very strong support box. If we get rid of the Fibonacci retracement, in this area, we have bounced a lot of times and we've come up and down. As you can see here, this is a low liquidity range. We go up, come down, go up, come down, go up, come down, go up, come down. We only really tend to have our bounces in this area, so we have a bit of consolidation, 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 consolidation in this range. This is an indication. Why are we on the 3 hour actually? Hold on a minute. It's an indication that a lower trend is yet to come. And just like we were saying in the previous video, it's likely that what may possibly happen, since normally this is a perfect sort of trend. Normally what ends up happening is when we come down from our all-time high, we come back up, we won't get back up to our all-time high. We got to 71,800 maybe, close enough. We were about 2,000 off, which is perfect, and it's exactly what happens when we come back up. Then we trend down again, and we go put in another low. Now, the interesting thing is, since the halving is around the corner, I genuinely doubt we're gonna really come much further below. However, there is something to be, keeping in mind. If we do start coming below these previous wicks at 59k over here and over here, we are going to start hitting stop losses. A lot of people enter their position around here or over here, and if we start coming below these prices, let's say around, let's get a parallel channel line back drawn out. This is a support area over here. That's a little bit of trading over there. That's like 56. And then also on top of that, this area over here, if we grab the parallel channel, this area over here is a large liquidity area. When we come down into these areas, we only wick, we come down and we come back up. Now, this is held up as good support. However, you've got to bear in mind, since a lot of people enter their positions over in these areas, that means when we do come back down, all the people who went long in that area, they're going to get stopped out, or they're going to get liquidated if they enter with too much leverage. And obviously, for those of you who know, when people enter a position and if they are stopped out, or when they do get liquidated, if they're going long, the market has to sell in order to, for that position to work. So you're buying to go long, and then you have to sell to close your position. And that is a sign that if that does happen, when we come down into these areas, down at 59, there isn't really much support below here. It will be down 56, and then even if we don't have a bounce here, it's down to 52, 53-ish. I could see 53, 52-ish coming into the chart. That would be a strong indication of a good trend, and that would be healthy. Just like we previously said on our chart, our head and shoulders pattern, just like that. If we draw either something like this, if we draw trend down to either a support over here, like that, down to 56, and then we put another shoulder in and back at this support, that would be perfect. And that would be the good bullish case scenario. We could take a measurement. That'd put us at something absurd. If we do, 56 to 70, 84,000, 85,000 price range. That would be amazing if that was to happen. As of right now, it does look like a strong trend is occurring for head and shoulders. So we have had a nice peak down. We didn't form a cup and handle. We didn't form a flag. That's perfect. We've come down now. I'm hoping to see something over here. If we start bouncing on this support, as these are low liquidity ranges. If we do start bouncing further lower, that would be a good sign that we are starting to trend lower. And if we start having a bounce over at 56, maybe even 52, if you want to stretch the head a bit further, there is some support over at this area. If you want to draw a support box down here, there is a good amount of support down here. We did trade in this range for quite a long period of time as well. This trend survived over here for a very, very long period of time. We were over here, and the same when we came down. This is like the only good support I see on this chart. Otherwise, if we lose the 52 area, unfortunately, there isn't really much support back till about 48-ish. But even at 48, that's a low liquidity area. 48 would drop us straight down to 42. So 40k is the next support area. I personally think it's unlikely. It's obviously anything's possible on our chart. I think it's unlikely that we start trending down into this range, but if we do, this is very strong support down at 48, down at about 40,000, maybe 42,000, maybe 38,000. That is quite strong support. So if we do start trending down to that area, that'd be fine, and we could obviously, maybe if we trend below something like either we come down here and then we've come down to here, we had a bit of a bounce, we come down a bit further, and let's say a load of people get liquidated and we bounce down to here, trade around in this area, and then we maybe bounce down to here. That's also possible, or the better case scenario is maybe we put a head and shoulders in something like this, then another shoulder. Once we see a head forms, or we come down and we come back up to the neckline, that is a strong indication that obviously this is a head and shoulders, and then I will be looking for an entry. I wouldn't be using too much leverage, maybe a 2x, maybe a 3x. Once I see a nice head and shoulders forming, that would be amazing. While as much as I'd love the head to be this low, the likelihood of that genuinely happening is probably unlikely, purely because of the fact that this is very, very steep. And hence, something like that would be perfect. Down to 56, that's a pretty good support area. If not, and we do start losing other support areas, that would be bad. Now, if we take a look at the Fear and Greed Index, get rid of this. The Fear and Greed Index is still in extreme fear. I'm likely seeing that we'll probably end up dropping our Fear and Greed reading down a bit further, going into when it gets updated in 16 hours. Bear in mind this drop occurred before this, legit after this was updated. So likely that if we do update this in 15 hours, which we will, the Fear and Greed Index would most likely drop to either greed, maybe to like a 75, maybe even a 70. We're not very fearful, but you've got to be wary that when these drops happen, people still think, oh yeah, we're going up further. I think they're normal. So we might be coming further down. If we take a look at the heat map as of right now, practically everything is in red, bar a very, very few coins. This one, I'm not even sure what Teo is. MKR, that one tends to not really move very much. Core has been going up nuts recently. And then the KuCoin coin is also doing fairly well, staying stable. The Big X token is also doing quite well. Right, so as that, practically the top 100 coins are all in red. It's just a sea of red. Obviously, like that you should understand is obviously when Bitcoin does come down, the other coins come down a lot higher. This might be 4.3%, ETH is 4.9%, and obviously the other coins will start moving lower. However, as this is now occurring, Bitcoin dominance has now ticked back over 52,000. With the Bitcoin dominance back over 52,000, that is a good sign as well. It means Bitcoin is still holding its dominance, regardless of whether it's coming down. You've got to bear in mind, since we have come up so quickly, if we do start trending down, these other coins down here, Dogecoin, Cardano, Avalanche, Solana, they are going to start dipping a lot faster than what Bitcoin is. If Bitcoin does start trending slightly below where we are currently, if we start actually take a measured move from here, let's say we trend down to, if you'll let me do this, and move it down. If we do try trending down to here, that would be a 20% move from our start at about 71-ish. If we do trend further than that, that would end up putting us at about 27 move. And if you zoom out, that would be a 38 move. Now, prior to halving, a lot of these moves are quite common. 20 to 40% would be completely fine. What I'm hoping for is more of a move down to this area over here. If that's the case, that'd be amazing. With a long to short ratio as of right now, the majority of people are currently going long. It's still fairly 50-50 split, but it is in the short favor as of right now on exchanges. Which is a sign that obviously you've got to bear in mind that since so many people entered their longs previously, it's likely that let's see, they will be more likely to get liquidated. It is still fairly a 50-50 split, which is something to be wary of. But you've also got to understand that obviously, while that's obviously here, some other exchanges are maybe a little bit more split. Like for example, Bing X, a lot more people are going long. And you've got to bear in mind, since a lot of people went long, they're going to have to hold out their positions. And since obviously some people don't honestly close it and don't put stop losses, if the trend does start continuing going lower, that would be a high indication that these people who have been going long on Bitfinex, Bing X, these people are going to most likely get liquidated. And if that is the case, that would be very unfortunate. and obviously that would cause the price to dump further. As you can see over here, the majority of people currently are fairly bullish still, which is good, but you've got to be wary of this. Another thing to keep into mind, right, is while obviously we are dumping, this is still very, very healthy. There are a lot of supports. These are dodgy grunt supports, but they're just in line with the channel, that's why. If this flag on the 15-minute does play out, that would put us down at 63. Now, while it still looks like it is still consolidating, if that plays out, by the time I put this video up, because I need to make a thumbnail too, gonna make the clickbait thumbnail. I only make the clickbait thumbnails just purely for the fact of, like, get more people to click on them. If anybody has any older ideas without a clickbait thumbnail, that'd be amazing. If you want to help me out. This would actually put us down at 63 if this flag plays out over here. And if this flag does play out, and we do start trending lower to this support box, there is no support. There's a bit of consolidation over here. But from this area, it's straight down to 60, basically, from 63. So if this flag does play out, and this will take quite some time, might take a couple of hours. If this flag does play out and puts us down here, you're likely looking at 60,000. And you've got to bear in mind that since obviously we came down to 60,000 before, and I want you to imagine this, let's say there's a bunch of people willing to buy Bitcoin at 60,000. Let's say 1,000 people want to buy Bitcoin at 60,000, right? And we'll get the Samsung drawing back out for this. Let's say at 60,000, 1,000 people want to buy Bitcoin. And so 1,000 people want to buy Bitcoin over here. Now, this has come down here, we consolidated at about that price for quite a good chunk of time. Let's say in that period, we knocked off, I don't know, 600 of the Bitcoin. When we come down here this time, unless other orders have piled up, and we can take a look at the order book, there will be less people who are buying Bitcoin. And hence, that support is now no longer as strong. And below that, it is just wicks, as you can see over here. They are just wicks. There isn't really actually any trading in this area. So when we do come below this, it's likely that we will start trending lower from that point. Because once we are below that, there's only so much support we have. This support box isn't very strong. You gotta bear that in mind. Yes, there are wicks, but the wicks go right down to the bottom at 59. And if they come down there, a lot of people will get stopped out of their positions. As most of you probably know this, most exchanges, what they will do is they normally wick the wicks slightly below the other wicks to stop people out of their positions. And that's exactly what happens. So you've got to be very wary of that when you're trading. And obviously this is the same as gambling, it's in the house's favour. It's always going to be in the house's favour. Especially when you're trading, it's always going to be in the exchange's favour. Because they have to make money too, you understand that. In this area over here, it's just low liquidity again, all the way from 59 to 56. And then some consolidation in this area, and then below that there's just low liquidity again. Because you've got to understand, since on the daily time frame, since we came up so quickly, again, we're going to come down quickly. It's just life. If we come down to this area, put a head in, put shoulder in, that's a good sign we can rocket off and go higher. So that would be amazing. Obviously with other indicators and stuff like that, there isn't really much to look at, so I'm not going to involve other indicators. This is just hardcore raw analysis. I'm not going to add on all the stupid indicators. I'm not going to put on the dodgy crap that most people want. We don't need that. Those are lagging indicators, and I can actually prove to you that those are lagging indicators as well. If we actually go and get rid of this firstly, let's go over here. I can show you these are lagging indicators as well, and the reason why we're going to go to Binance is because Binance is a lot better. You've got to be very, very wary when you trade these things. These are all lagging indicators, and we can obviously take a look at it, and it's fine to look at it, but the indicators obviously lag as well, and that's fine to look at, but for some extent it's not. Go full screen. It's not full screen, it's just bigger screen. Tap that, hopefully it loads. Alright, if we quickly go to the indicators, we'll whack this off, put the Bollinger Bands on. The Bollinger Bands are probably one of the better indicators, to be honest, as opposed to the others. But yeah, if we probably don't want to look at the daily Bollinger Band at the bottom would put us at 62, which would be perfect for how far we could go today. So 63 is where we were putting, yeah, if we go down to 62, that'd be amazing, and then we start jumping further lower from there, or we have a bounce. On the weekly chart is what I'm actually looking at for the Bollinger Bands. Right. As most of you probably know, most of you lot that who trade who probably know this, when we use the Bollinger Bands, we look for a bounce. And normally, in an uptrend, they tend to bounce on the middle Bollinger Band. And as you can see, we have a bounce, bounce, bounce. We had one tick below, bounce again, bounce again. We're obviously, it's very unlikely that we come down to 26,000. It's just improbable. It's possible, but even with the Bitcoin power law, the bottoms around this area, so it could be, but I just doubt it. Anything's possible though, so who knows. This is bang on at 50k. And the interesting thing about this being at 50k is exactly what I said, it could come down to 52. When this weekly candle closes, if it closes red, we are currently at, what day is it? It is Tuesday. So the weekly candle's actually only just started and we're already red. It's not a good sign. As the week goes on and we do start closing, when this candle does close, this pink line will start moving up. It will start trending slightly higher, and that could put us at about maybe 52 and then 54 each candle that we put in. And as it goes up, it's more of an indication that we're likely to come back down, because you have to wait for the candle to, you have to wait for the Bollinger Band to come up a little bit more, and then we start trending below. With the MACD is obviously again a lagging indicator, but what I'll tell you, the MACD is currently rolling over on the weekly, which is a bad sign, and it's a sign that we are going to start trending lower. And this is exactly what I was saying yesterday. When the market is bullish, the only thing that the indicators can predict is that the market will continue being bullish. When the market is going down, the only thing that the indicators will predict is it's going down. You cannot predict the opposite when the market is going either direction, because you can't tell when the top is. That's exactly why we look at chart patterns instead of looking at indicators. Volume, you see it over here. As of right now, this is quite interesting. The volume for the weekly candle, this is not very much volume at all. As you can see, on our weekly candle, this dump has occurred with very little volume. And this is exactly what I said yesterday when I made the previous video. You've got to understand that when we're up here, there might not be very much buy pressure, but all it takes is a small amount of sell pressure and then we start coming down. The MACD is rolling over. Might take us maybe a couple of weeks. I think the daily MACD is already rolled. Can you take a look at this? The daily MACD is already rolled, and we are starting to spread. When we start spreading, as you can see, we are starting to spread. When we start spreading, there's an indication we're going to go lower. The RSI is also spreading, which is also another indication that we're going to go lower. And if we take a look again at our MA, we have broken below the 20 MA, which is a 20-day rolling average. That means the support for this would be at 63. And again, our flag puts us down at 63. So that'd be amazing if we jump down, maybe have a bit of a bounce here, come up here, and then we start continuing lower. Something to be wary of is the 200-day moving average is actually sat at 63, 64-ish K. And that is at our previous support box. If we do start trending below here, this is very, very good support. We could have a bounce off the 200. And that would be amazing. If that is the case, that's fine as well. It's something to be very wary of. With regards to our EMA ribbons, for those of you who know how they work, like I explained yesterday, when the EMA ribbon crosses through the candle at the top, it goes down. When it crosses below, it crosses like from under, like this. It'll go up. There's this candle here where it crosses below it. When it crosses through it, that's normally an indication we go up or down, depending on which way it crosses. With regards to, let's see if we pull off this indicator quickly. Take this off. Get your other indicators over here. These are more or less useless, to be honest. I'll save this. With regards to how this market's currently holding up, again, it does look like we are starting to form the exact same pattern I keep saying. These dumps are quite fast. When we come down into these areas, the dumps become faster and faster. And you've got to bear in mind, if you come down once, the second time there isn't as much support and we come down faster. So it's an indication that either A, we are going to form a head and shoulders, or we are going to go lower. So that is something to bear in mind. So yeah, get rid of this stupid line over here. Right, that's about all for this video, and I will see you guys later. Like and subscribe. If you haven't watched the previous analysis videos, please do. The like and subscribe will help me to stay consistent. That'd be amazing if anybody would like to like and subscribe. I'll be doing these videos once a day, or anything once a day, some sort of content once a day. I do have a second channel as well where I just post random stuff. If you want to watch that too, feel free. It'll just be anything that's not trading related. But yeah, I will like and subscribe, and I will see you guys later. Goodbye.